Welcome to Virtual Learning Network. Retail Banking. This is session 2. Participants in Retail Banking in India. Topics to be covered. Number 1. Introduction. Number 2. Unorganized sector. Number 3. Commercial banks. Number 4. Private banks. Number 5. Foreign banks. Number 6. Regional rural banks. Number 7. Cooperative society. First we have introduction. Retail banking is banking in which banking institutions execute transactions directly with consumers rather than corporations or other banks. Services offered include savings and transactional accounts, mortgages, personal loans, debit cards and credit cards. Retail banking services are also termed as personal banking services. The various participants in retail banking in India are unorganized sector, commercial banks, private banks, foreign banks, regional banks, cooperative societies. These all come under retail banking sector of India. Retail banking segment is continuously undergoing innovations, product re-engineering, adjustments and alignments. After the invent of ATM machines, do you ever see long queues in banks for withdrawing and depositing money? Anytime you can withdraw your money and deposit your checks in few minutes, even in off-banking hours. With the retail banking sector expected to grow at the rate of 30%, players are focusing more and more on the retail and are walking up to the potential of this sector of banking. Next we have retail banking products. There are certain retail banking products. Those are checking account, savings account, money market account, certificate of deposit, that is CD, individual retirement account, that is IRA, credit card, debit card and mortgage. We have some more: home equity loan, mutual fund, personal loan, time deposits and ATM card. We'll start with the first participant in retail banking, that is unorganized sector. Organized sector cover those enterprises or places of work where the terms of employment are regular and people have assured work. But unorganized sector is characterized by small and scattered units which are largely outside the control of government. The informal sector is referred to as an unorganized sector. This sector generally corresponds to the household sector, including private unincorporated enterprises. The unorganized sector also includes some formal activities on which there is no regular system of data availability. In the retail banking sector of India, this unorganized sector plays a very crucial role, especially in the rural areas, that despite a decade and half of the economic reforms and rapid progress in the Indian banking sector, the informal financial resources generally include funds available from the family or money lenders who operate outside the legal and policy framework of banks. We have seen that in the most villages, the jamindars are the main sources of rural credit lending to the people for various purposes like farming, land purchasing, cattle purchasing और marriages. हमने देखा है कि विलेजेस में रूरल सेक्टर में ज़मींदार होते हैं जो लोन प्रोवाइड करते हैं फार्मर्स को फॉर देयर फार्मिंग, उनकी फार्मिंग के लिए, या फिर अगर उनको कोई ज़मीन खरीदनी है उस लिए, या तो उनको कोई कैटल परचेज करना है इसलिए, या फिर उनकी फैमिली में कोई शादी है तो इसलिए. सो द मेजर सोर्स ऑफ फाइनेंस इन द रूरल सेक्टर इज़ ज़मींदार्स. Microfinance institutions could play a significant role in facilitating inclusion as they are uniquely positioned in reaching out to the rural poor. Now we have some characteristics of unorganized sector, like low scale of organization, operation of labor relations on a casual basis or on the basis of kinship or personal relations, small owned account or family owned enterprises or micro enterprises, ownership of fixed and other assets by self, risking of finance capital by self, involvement of family laborers, production expenditure indistinguishable from household expenditures, and use of capital goods. Easy entry and exit, free mobility within the sector, use of indigenous resources and technology, unregulated or unprotected nature, absence of fixed working hours, lack of security of employment and other social security benefits, use of labor-intensive technology. Next participant of retail banks are the commercial banks. Commercial banks has two meanings. Commercial bank is the term used for a normal bank to distinguish it from an investment bank. The other meaning of commercial bank is commercial bank can also refer to a bank or a division of a bank that mostly deals with deposits and loans from corporations or large businesses as opposed to normal individual members of the public. It is the most successful department of banking. Commercial bank is a financial intermediary which collects credit from lenders in the form of deposits and lends in the form of loans. A commercial bank holds deposits for individuals and businesses in the form of checking and saving accounts and certificate of deposit or varying maturities, while a commercial bank issues loan in the form of personal and business loans as well as mortgages. The best commercial banking and small business strategies provide thoughtful services and a high attention to customized customer service, which leads to increase in revenues and profits. In India, commercial banks are now stepping in retail banking sector too. Commercial banks also provide extra services that target small businesses. These banks are now trying to decrease the complexity of all paperwork. Next is private banks. Private banks manage the assets of high net worth individuals. All those banks where greater parts of stake or equity are held by the private shareholders and not by the government are called as the private sector banks. These are the major players in the Indian banking sector as well as in expansion of the business activities in India. The present private sector banks, equipped with all kinds of contemporary innovations, monetary tools, and the techniques to handle the complexity as a result of the evolutionary process over 2 centuries. They have a highly developed organizational structure and are professionally managed. Thus, they have grown faster and stronger since past few years. So, private sector banks play an important role in development of Indian economy. For example, after liberalization, the banking industry underwent major changes. The economic reforms totally have changed the banking sector. RBI permitted new banks to be started in the private sector, and the Indian banking industry was dominated by public sector banks. Productivity, profitability, professionalism, introduction to technology, competition from private sector, innovation of new products and services, etc. have set in and necessitated dramatic changes beginning with financial sector reforms in 1991. Now we have some examples of the private banks and their year of establishment. Axis Bank, which was earlier known as UTI Bank, it was established in the year 1994. Bank of Punjab, it was established in the year 1989. Centurion Bank of Punjab, its year of establishment is 1994. Development Credit Bank, its year of establishment is 1995. HDFC Bank was established in 1994. ICICI Bank was established in 1996. IndusInd Bank was established in 1994. Kotak Mahindra Bank was established in 1985. Yes Bank was established in 2005. Public sector banks and all private sector banks realized their new role but also welcomed the new generation banks like Bank of Punjab, HDFC Bank, IDBI Bank, ICICI Bank, Centurion Bank, IndusInd Bank and Times Bank. These new banks had the advantage of starting with a clean slate, educate capital resources, well-trained and professional manpower, absence of non-performing loans in their books, computerization, lean organizational system, handful of branches in chosen center, and a new variety of product and services, etc. Now, next participant in retail bank is foreign banks. Foreign banks means a banking institution incorporated or organized under the laws of a country other than the India, or a political subdivision of a country other than India, that is regulated as such by that country's or subdivision's government or any agency thereof, engage substantially in commercial banking activity and not operated for the purpose of evading the provisions of the Act. The share of foreign banks in the business done in the country in the form of deposits and advances has been hovering between 5 and 7% during the past decade. A new rule announced by RBI, that is Reserve Bank of India, for the foreign banks in India in Budget 2008-9 has put up great hopes among foreign banks, which allow them to grow unregulated. Now, foreign banks in India are permitted to set up local subsidiaries. At present, there are 29 foreign banks in India through 273 branches and 871 off-site ATMs. Besides, there are 34 foreign banks operating through representative banks. The oldest foreign bank that came to India over 150 years ago is Standard Chartered Bank, which now operates the maximum number of branches, that is 83, followed by HSBC, which entered in India in 1867, is operating with 47 branches. Citibank has 39 branches and ABN AMRO 28 branches, and the Deutsche have 11 branches. Now, the reasons for foreign banks entering in India are: India's GDP is seen growing at a robust pace of around 7% over next few years, throwing up opportunities for the banking sector to profit from. The credit of banks has risen by over 25% in 2004 and 5, and the growth momentum is expected to continue over the next 4 to 5 years. Now, there is a list of foreign banks in India like ABN AMRO Bank, Abu Dhabi Commercial Bank, Bank of Ceylon, BNP Paribas Bank, Citibank, China Trust Commercial Bank, Deutsche Bank, HSBC, Krung Thai Bank, Mashreq Bank, Oman International Bank, Standard Chartered Bank, Taib Bank, and State Bank of Mauritius. JP Morgan Chase Bank, Standard Chartered Bank, and Scotia Bank also. Now, next participant of retail bank is regional rural banks. The Government of India set up regional rural banks, that is RRBs, on October 2, 1975. Initially, 5 RRBs were set up on 2nd October 1975, which was sponsored by Syndicate Bank, State Bank of India, Punjab National Bank, United Commercial Bank and United Bank of India. Capital share being 50% by the central government, 15% by the state government and 35% by the scheduled bank. Now, another important feature of banking reforms has been to alter the equation between different sectors of banking. In this case, to make the norms governing regional rural banks, that is RRBs, indistinguishable from those governing commercial banks, thus undermining their capacity to serve the special needs of the rural bank and the rural economy and the rural poor. Now there is a list of regional rural banks that are North Malabar Gramin Bank, South Malabar Gramin Bank, Vanachal Gramin Bank and Allahabad UP Gramin Bank. Next participant is cooperative banks. Cooperative banks in India started functioning almost 100 years ago. The cooperative bank is an important constituent of the Indian financial system. Cooperative banks in India are registered under the Cooperative Societies Act. The cooperative bank is also regulated by the RBI. They are governed by the Banking Regulation Act 1949 and the Banking Laws, that is Cooperative Societies Act 1965, that is Banking Laws Act 1965. Now, cooperative banks in India finance rural areas under farming, cattle, milk, hatchery and personal finance. There are various types of cooperative societies like housing cooperative, building cooperative, retailers cooperative, utility cooperative, worker cooperative, business and employment cooperative, social cooperative, consumers cooperative, agriculture cooperative, cooperative banking, that is credit unions and cooperative saving banks, federal or secondary cooperatives, cooperative wholesale society, cooperative union and cooperative party. Now there are certain characteristics of cooperative societies like open membership, voluntary association, state control, source of finance, democratic management, service motive, separate legal entity, distribution of surplus, self-help through mutual cooperation. Now, cooperative banks in India finance under areas under self-employment, industries, small-scale units, home finance, consumer finance and personal finance. The two main categories of the cooperative banks are short-term lending oriented cooperative banks and long-term lending oriented cooperative banks. Short-term lending oriented cooperative banks are again of three categories like state cooperative banks, district cooperative banks and primary agricultural cooperative societies. long-term lending oriented cooperative banks are operate at three levels, that is number one, state level, district level and village level. Now there are certain facts about cooperative banks in India. Some cooperative banks in India are more forward than the many of the state and private sector banks. According to NAFCUB, the total deposits and the lendings of cooperative banks in India is much more than the old private sector banks and also the new private sector banks. This exponential growth of cooperative banks in India is attributed mainly to much better local reach, personal interaction with the customers, the ability to catch the nerve of the local clientele. The sources of their funds means the sources of cooperative banks are basically the central and the state government, the Reserve Bank of India and the NABARD, other cooperative institutions, ownership funds and deposits or debentures issues. Now we have certain questions. Do it yourself. Number 1. How do private banks contribute in the retail banking sector in India? Number 2. What is the role of cooperative societies in retail banking sector of India? Thank you.
In this section, we will provide very efficient or brief details of the interest of a system called
F9 तो मैं प्रेस कर चुकी हूँ.